Hello everyone and welcome to today's video. This is going to be a little bit of a unique video as today I'm just going to be going over kind of a little bit of the reasoning behind why I made a YouTube channel and more specifically talking about a lot of the negatives that come with the finance YouTube space as a whole and kind of talking through some of those points and how I think it's really leading people astray. So first off, in terms of the finance YouTube space, something I really notice is a lot of people, their content, the content creators, they lack any actual education. And I'm not trying to say that you necessarily need a college degree or you need a master's or anything. In fact, a lot of my learning that really stuck with me, I learned just outside by reading actual material like Warren Buffett and Charlie Munger, and also looking through Benjamin Graham, and then just reading on my own, even outside of the best top of the top investors. But something I've noticed specifically really with the dividend content creator space is that a lot of them don't actually talk about really the important things behind dividend portfolios. Now, I think a really good example of this would be that they kind of just highlight, if you go onto Yahoo Finance, you can just see the 3-year, 5-year, 1-year historical returns, and then they'll just hit on the dividend yield. And then they'll just move on to the next position in their portfolio. And really, I think this actually sets up a lot of investors for admittedly failure. And I know an example I've given in an earlier video, but I think it's a good topic to kind of bring in on this point is that I actually participated in the CFA Research Challenge, and my school, we got given a company that was a family-run company. It had been for multiple generations, and they had always prioritized dividends above anything else. They were a dividend aristocrat. They'd grown the dividend consistently for a really long time. They gave special dividends, and on paper, if you're a dividend investor, you would look at a company like this and be like, oh my God, this is incredible. But my team actually gave a sell recommendation, and a lot of that thesis boiled down to the fact that their payout ratio was well over 100%. Now, when we're talking about dividend content creators, payout ratio should at least be mentioned, but for a lot of people, it's not at all. And this kind of leads to the sustainability of a dividend. So the company we were looking at, what was actually happening was the largest holder of their A-class shares were the current family members, the 3rd generation, 4th generation, or whatever. And they had all well over 50% of the A-class shares, which had all of the voting rights, and so they kept issuing special dividends and wanted to raise the dividend. And so what ended up happening was, since they're paying out significantly more than they were earning, they were having to debt finance these special dividends and the dividends in general. Now, out of all of their reasons to go into debt, returning money to shareholders is a really horrible reason. I like dividends as much as the next person, but I'd much rather focus on companies that give sustainable dividends. They still have money over that they can in turn do R&D with, or they can repurchase shares, and they're not so dead set on just trying to suck all of the money they're earning and throwing it into a minority's pockets, that being the 4 or 5 family members who have well over 50% of the voting rights. And this is a company that, mind you, since then, their share price has gone, it's fallen off a cliff. It's exploded. So even with your incredible dividend, even in the past 3 years, you've just been making your performance suck slightly less. But then also, if you have this company in a taxable account, that's not even necessarily happening. You get taxed on dividends. And this is, again, a company that I've seen multiple financial YouTubers talk about and say they have in their portfolio. Like, it's a pretty big name in the dividend space. And yet, again and again, not once have they mentioned any of these issues. And I think that just boils down to a lack of education. Some people really think, All you need to do is look at the 1, 3, and 5-year historical return percentage, look at the dividend yield, and call it a day. And you really don't at all. You can't do that because you're setting yourself up to invest in companies that share price is just falling off a cliff and it's not even paying for your losses. You wanted a dividend income portfolio and instead you're just getting a sucky portfolio. So instead, I would definitely prioritize trying to focus sustainable dividends, and also more than that, find YouTubers who actually know what they're talking about. They don't just give you hype, they don't just tell you a dividend percentage and be like, you could earn $2,000 a year, and leave out the fact that you have to buy $30,000 worth of shares. Oh, and by the way, they lost $6,000 in a year, you got $2,000 in dividends, so you're in the whole $4,000. Just maybe, just maybe. So always look for people who don't actually walk you through balance sheets, financial statements, anything of that. They don't walk you through business models necessarily. They just give you a Sparks Note version, and they don't actually tell you whether or not the company can even afford to pay this dividend. Because what's going to be really bad is when you have a dividend portfolio full of these really highly covered companies that the dividend content creators tell you are going to be surefire bets and they're great for your portfolio, and then multiple of them have to cut their dividend, which in turn just deletes any returns you had whatsoever. So, and this isn't only something that applies to dividend YouTubers, it's just I see it a lot there, and that kind of really wanted me to focus on trying to actually make my own content, but you see the same thing with day traders and option traders and everything of that sort. So the next kind of thing you're going to see on the finance YouTube space, I want you guys to be mindful of, is the people who their time horizons are very, very short. These are the get rich quick people. Oftentimes, these are going to be people who are telling you you need to invest in options and follow exactly what they do, or the day traders. Now, what I want you guys to do is take 20 seconds. You can even pause the video. You could stop watching it, honestly. Do whatever you want. Take 20 seconds to Google your odds of becoming a successful day trader. Just please. It's horrible. You're better off throwing your money on black, and that's not an exaggeration. Put your kid's college fund on black and let it ride is much better than I'm going to become a multi-bajillionaire or whatever from day trading. Statistically, you're not. Sure, it's humanly possible. There are a lot of things that are humanly possible that could potentially happen. That one, yeah, sure, there's a very slim chance that happens, and if it doesn't go well, you lose a lot of money. Your taxes at the end of the year, yes, if you think longer than even like 3 days ahead, you're going to get hit with a fat tax bill because of how many transactions you're making. And suddenly you're going to be out of the hole significantly more than you would have been had you just made a good compounding portfolio, focused long term, and done the right things. So again, be mindful of the get rich quick people. And then also, I know I mentioned a lot on the day trader side. On the options side, you can be correct in the direction of a company's share price and still lose money with options. This is something that is very complicated. It's, again, very complicated, that takes a lot of learning and understanding to actually master or even be competent at. Do not get fooled because some guy on YouTube showed you one time he made money and is like, oh my goodness, this is the easiest thing in the world. You too should trade options. If you want a life learning lesson on that, you can navigate to Reddit and look at Wall Street Bets real quick, and you can learn, yes, there is a slim chance that you make a lot of money. You know what else there's a chance of? You lose all your money and you owe money. So again, be mindful of that, make good investment decisions, and try and follow and learn from people who make good financial decisions. Similarly, in that crowd, this is where you're going to see that a lot. Be mindful of what people are trying to sell you. A lot of these people, it boils down to a course. They're trying to sell you a course. That's where they actually make their money. They don't make that much money actually investing or doing options or day trading. They want to rent a car that looks nice. They want to get an Airbnb that looks nice. And they want you to want their lifestyle and be jealous of it. Because then you're like, oh my goodness, look at how much money they're making. Maybe I haven't had the best circumstances in my life so far. I haven't been fortunate enough, and this could really change my luck. And it's really sad. It's manipulative. I couldn't sleep with myself at night if I did that. Personally, I like feeling like I'm doing good and helping people and actually giving people positive things to think about in the space of finance. But some people will throw all of that aside, will throw aside any feeling of being a good person just to get rich. So be mindful of that. I'd also say, in general, a good rule of thumb, and I know this is funny coming from somebody who's trying to make a go of it as a hobby of making YouTube videos on this subject, be very, very, very mindful of anything a finance YouTuber says. They're going to be encouraged to exaggerate or to give you unrealistic expectations because that's what's going to generate the most views, likes, get them more ad revenue, get them sponsorships. So again, be mindful of that. They won't necessarily give you the best quality advice all the time because at the end of the day, they're people who are trying to make money off of this. I'm no better, you know? For all you guys know, I could be a horrible person outside these videos because you don't know me and you don't know these people who you watch. Like, you don't know the ins and outs of their life outside of what they show on YouTube. So please be mindful of that and think through that. So next we kind of have, I hate these people so much, the glorified insurance salesmen who say they're financial advisors. Now, this is something that also kind of expands outside of just necessarily the finance YouTuber space, but it's something that also happens in real life and people kind of get suckered for this. But these people will claim they're financial advisors. They won't have a CFP. They won't have anything like that. Instead, they're glorified salesmen. And they're just trying to get you to buy whole term life insurance. Now, I'm not going to say any companies because I don't want beef with any companies or any people, because a lot of these people will also just hit you up on LinkedIn out of the blue. It's crazy. They're in a cult, mind you. They are in a cult. They'll just hit you up on LinkedIn. So again, not going to say any companies, but if you know what I'm talking about. So anyways, don't fall for this trap. If your financial YouTuber you're watching or people you're talking to aren't prioritizing accounts that are at least semi-familiar, like giving you actual advice on 401k stuff or traditional IRAs or Roth IRAs or long-term investing in general, and they're trying to prioritize, hey, you need to protect with insurance. Now, there are obviously situations when it's really good. Whole life insurance, probably not, but term can be used well in the right circumstances. Like, sure, there are definitely benefits to having insurance at points, but a great way you can kind of figure out what somebody's end goal is A, are they a fiduciary? Are they doing the best interest for the client, or are they just trying to pump out sales and volume? And following that, ask somebody, hey, in your actual work, are you commission-based or fee-based? Because here's a really, really quick, easy thing to understand. Commission-based, again, it's all sales-driven. It's all going to be how many sales, how many transactions, how many life insurance policies or products can they sell you. Whereas fee, they are at least incentivized to make you money. Because think about it, they want to make more money. Everybody wants to make more money. And if it's fee-based, they're required to actually grow your portfolio in order to make that extra money. They're not just trying to do a bunch of transactions, because then you're buying a bunch of products you don't even really know about. And even on the investment side, you might be buying into a lot of funds that are underperforming even the S&P 500 or just stink in general so that somebody can get sales commissions. So absolutely be mindful of that. The last thing I'll leave you with is find YouTubers who give actual investment theses, not just, hey, this is a big booming AI stock that everybody's talking about. Now, I get it. I do understand, because at the end of the day, the companies that are going to be most followed, the Teslas, the Nvidias, the Googles, you're going to get a lot more views and a lot better chance of blowing up or going viral if you only make content on those types of companies and you prioritize talking about those types of companies. And that's where a lot of the people in the space really reside, is trying to compete with the big dogs. But some of these people shouldn't be making content there at all, and they won't actually walk you through business models. They'll give you a very brief understanding, like Apple makes phones and leaves it at there. There is a whole product offering you can walk through for Apple specifically, and there are multiple things that you need to keep in mind if you're going to invest in a big company, but they're not going to say something like that necessarily. A lot of these people, they're just going to say really easy, brief stuff you yourself could pull from Google in 13 seconds, and God forbid they pull up a financial statement or walk through an actual investment idea or talk about something that's going to explode revenue 2 years from now. It's not going to be like that. And this is one of the things that really kind of upset me when I was trying to watch videos in this space, because this is a humongous passion for me. This is my favorite thing in the world, and I was having a hard time finding a YouTuber I could actually watch and be like, I'm actually learning, because a lot of it is just boom, look at what this company's done the past 3 years. Historical returns are not a great indicator that a company is just going to continue to outperform forever. Yes, the momentum factor is a thing. Momentum is a thing. It's been proven time and time again. Yes, that is not a quality investment thesis. There's no target price. There's no model or valuation. There's no digging through the balance sheets and kind of talking to the viewer. And I feel like at the end of the day, content creators owe it to their audience and to even just the random people who stumble upon a video of yours, or it plays in the background, or anything whatsoever. We're in a space talking about money and financial decisions that can impact people to make decisions with their money, or can sway their views or anything in that nature, and there can be real repercussions. So please, as the viewer, be mindful of all of the things I've mentioned today going forward, especially when you're trying to watch people. Make sure they aren't trying to sell you products just for the simple purpose of getting more fame, more views, more ad revenue, things of that nature. And I'm hoping that going forward, there will be kind of a shift where we'll see some of these YouTubers kind of fall off and die out, but stuff's not going on all the time. You don't constantly need to be glued to your phone to see what's happening in financial markets, because a lot of things aren't worthy of actually making transactions. And if you're getting bombarded with big AI hype, or any of the trends that have happened in the past or anything of that nature, then you're going to feel like you need to make transactions. You might get FOMO, you might fall into the fear or greed sector, and that's things that will make you make terrible decisions for your financial future. So again, thank you for checking out today's video. I hope you guys kind of learned something, or even if it was all kind of basic stuff, at least now going forward, you might kind of remember that and be like, hey, I should be mindful of who I watch online and who I fully believe and take for face value. Okay, thank you very much for checking out today's video. I really appreciate your time. Thank you very much.